When I was in college, my economics professor walked into class and he started talking about what economics is. I didn't know that, but I've joined one of the toughest professors that were there for economics. I didn't know that at the time, but after I joined, one of the students that was with him before started telling me how difficult he was, and along the way I've realized that that he really is and was one of the most difficult professors I've had, and I say that on hindsight today, but I was very lucky to have such a tough guy that really drilled what's really important in economics. And the concept he taught me, even at the time, I still think about many of it today on some of the economic debates that we have. But one thing that he said that stuck with me all those years, which is completely off and is completely wrong, is that he said that economics is logical. So part of his preview in the first class was, and mind you, that it was many, many, many years ago. One of the things he said is that economics is logical, and as long as you follow a logic, as long as you're a logical person and you know how to follow logic, then you'll do fine. But unfortunately, not many people did well in this class, and there were many people who dropped out. And if I had to go back and, as a young student, and actually correct him, and again, on hindsight, after so many years in trading and owning a business and being an entrepreneur, is the fact that economics is not logical. Economics has its own logic, and that's completely different than logical. So there's a lot of things in life that seem to people who've been in the field for a very long time that it's just logic, but that's not true. Every field has its own logic. And once you understand its own logic and its own universe, then it makes sense. So there are things that are logical, which are universal. You don't cross the street if you see cars coming, right? You stand. That's logical. This is something that would apply to pretty much every country. It doesn't matter what language you speak, or in every road. It doesn't matter if it's an urban road or rural road. If you're in the city, just don't cross the street when the car is coming. That's logical, right? So you and I could probably sit here all day and talk about what things you do and you don't do that are logical. The problem is that, again, that certain areas require their own understanding of logic. One of them is trading. So here's what I want you to realize. Trading is not logical. It has its own logic, and you have to follow the paradigm of its own logic. Again, this is my opinion. This is how I view the world. You may have a disagreement. That's fine. If you're listening to it on YouTube, you can put your comments below. If you're listening to some sort of a podcast and you have a way to comment, sure. Always open to any idea out there. But what I think trips many people in the business of trading is that they approach it as a logical business. And it is not a logical business. Again, it has its own logic. So logic many times implies that many of the things that you'll come across, pretty much by intuition, you'll be able to guess what to do, right? So let's say you came from, another planet, and, you're trying to cross the road and you see a big truck. You still understand that this is something physical that's going to hit you. So whether you're a 4-year-old or you're 40 or 400, and you're a creature or you're a Jedi and you're standing on the road, you understand this thing is going to hit me. I better get out of the way. It's logical and it's intuitive. But trading has its own logic. So when you walk into it, there are certain things that you have to realize, and a lot of it will come from experience too. You have to trust your gut also to develop the logic of trading once you start trading. Let me give you an example. So, for example, when you use social media, right? And everybody is bullish out there, right? And I'm talking about day trading. I'm not talking about long-term investing. We're in the business of day trading, we're in the business of futures, we're in the business of leverage, or even if you trade stocks, this is specifically for day traders. I'm not an investment advisor, so I'm not going to talk about that, as it has its own logic. But, basically, let's say that you're listening to all the social media and the tweets and everything else, and the market is, and everybody's bullish, right? One of the things that you learn is not to follow the crowds, right? It's just you don't follow the crowd. You have to do your own thing, right? If you follow the crowd, most of the time the crowd is wrong. By the time they're bullish, the market turns around, and you have to be bearish. Because everybody is overconfident at the top and overly skeptical at the bottom. And this could be on an intraday chart, it could be on a long-term chart. That's just a cycle. And it's just something that you've learned over time, not to listen to the news, right? And nobody tells you that, initially. It's not that logical, right? Because you're saying, well, if everybody's bullish, maybe I should be bullish too, right? Because then you start realizing that basically that trading is very, very individual. And nobody tells you that either, right? This is not something that is completely logical. It just trading will develop within you in such a way that you will have to develop your own logic. And part of that logic is adopting to your own risk and reward parameters of what makes you feel good and sleep well at night. If you work with the parameters that you like, then it's individual. Now, a lot of people saying, well, that's kind of logical. Yeah, right. It's logical. This is why everybody who's a beginner trying to ask, what's the best indicator? What's the best moving average? How many points will you take on the mini S&P, on the micro? How many points you go for? I see what's people asking out there. It means that they, again, treat this market as logical and not as one that having its own logic, right? One of the things that nobody tells you, which is, again, having its own logic, is how you deal with bad days, how you deal with drawdowns, how you deal with losses, how do you deal with the bad periods that occur. It becomes very, very individual. There is no specific logic for it. It's just, you have to just do your own. You just have to simply understand it. I don't know, comfort yourself. I don't know how you overcome it. I mean, to me, just in bad days, listen, it's just part of bad days. Nothing you can do. If you can trade through that and you're getting overly depressed and overly emotional, then it's not for you. And it's the same thing if you have good days, right? If you are just in a total state of euphoria, it's not that way to act either. And over time, you realize it. You realize because nobody tells you what sort of a toll emotions take on your trading. Nobody tells you that, right? And it's not logical, right? It's just, again, it has its own logic. You have to deal with it with its own parameters, right? Trading is a business that is the most expensive business in the world when you make mistakes. So many times it's the business of, as I always say in every podcast, is making good decisions, right? The barrier to entry is very small, but the success rate is very small as well, because you need to sharpen your skills and you have to basically operate within certain guidelines and rules that you develop for yourself. Now, there are things that I would say that potentially that could be logical, but they don't really work in real life, and that's where trading has its own logic. Like, for example, if you think adding money to losing positions, a lot of times people think, well, if I add all the time, eventually the markets will come back, right? If the market is going down, you keep on adding, and if it's going up, you keep on shorting. The issue with that is that, again, nobody has infinite amount of capital. So those things can last forever, right? Those markets can go up for a prolonged period of time and they can go down for a prolonged period of time. And they don't necessarily know how much capital you have. They just have to do the thing they have to do. one of the things that still people can't wrap their head around is, for example, when a company comes up with earnings. And again, I'm not a stockbroker. I'm not giving you stock advice. But I'm saying sometimes those stocks have a tremendous effect on the indices that we trade, right? The mini S&P, the micro S&P, NASDAQ, and so forth, right? It could even affect other products, gold, crude. But the point is like, well, I don't understand. The company did so well, right? How come it's not going up, right? Well, that's logical. That's the logic that it dictates to a normal human being. It says, yes, if a company does well, but trading has its own logic. If everything was factored in from before, well, guess what? It's not a surprise anymore and everybody's taking the profits. And so, the stock is going down. It affects, if it's a highly capitalized stock, it will affect the indices as well, right? So that's what I mean. You have to start, going into the, diving into the trading that has its own logic. And over time, you will figure it out. One of the things that I would say that people treat as logical is basically the use of charts, right? So they draw support, they draw resistance, they draw all those things. Then they say, okay, if it appears on a 5-minute chart and it appears on a 15-minute charts, on a 30-minute charts and a 60-minute chart, then it must be a really, really strong support. Sure, that's the logical approach to it, right? Of course, but in reality, what happens, charts only provide, in my opinion, not a predictive power. They just provide parameters for better risk and reward. This is how I treat charts, right? So when I initially got into the business, and again, as I don't know which podcast you're joining us, right? If this is your first podcast or your 100th, I don't think I did 100, but I did, 60 now, 70, I'm not sure. But I don't know how many times you listened before, but I always say that I'm not coming from a place of criticism, right? I'm here to share with you my experience, and many times some of those things that I'm talking about, those are the mistakes that I've done before. And one of the things that I've done before is, again, not understanding that trading has its own logic, and charts, as I mentioned before, should be used to formulate setups for better risk and reward. They don't have a predictive power for the future. That's what we all like to believe, right? This is why we pay for subscriptions. This is why we pay for signals, because we'd like to think that somebody else out there has a crystal ball, but they don't, right? So again, once you start having this approach of understanding its own logic and to use charts the right way, I believe it gives you a better chance to be, to be a better trader. Two more things that I have to mention, right? So one of the things that, were, that were not explained to me when I got into, nobody owes me anything. It's not that it wasn't explained. Maybe I didn't come across it. I really did not understand how much character affects trading. I just didn't know that. I didn't know that, sometimes the market can take a character that you have and it's a strength in real life. Maybe you're a guy that your ego really helps you in your profession on a day-to-day, and in the marketplace, it will absolutely destroy you. Or you have a character of being amazing with, systems such as engineers, and they build systems and they could be very, very meticulous and build parameters that would make a perfect system. And yet in the marketplace, it's such an imperfect logic that their logic becomes a little bit, their ideas of the market and trading becomes a little bit scrambled, like somebody cut off the wire, because they always think in process 1 leads to process 2, leads to process 3, and markets they're not built that way. They're a lot more fluid and a lot more dynamic. So a lot of the things that I thought that could be a strength, they're actually a weakness in the market. And again, this is not just, common sense logic. again, trading has its own logic, like I said. So that's basically it. The one thing I will tell you, if there's a common way of accepting ideas in general, right, is avoiding egos and being very, very open-minded to what I'm telling you here. You might disagree. You have the right to disagree. Free country, you can disagree. But just keep an open mind a little bit about some of the things that I said here, because some of the rules are just a little bit, in real life, they could be very defined, and in trading, they become rather vague and not helping. So that's basically it for now. That's it, guys. That's what I wanted to convey during this podcast, that trading has its own logic. So I wish you well. I wish you a great week. I wish you a great day. I'll see you at the next podcast. If you're looking for a futures broker, please come to us. It's www.optimusfutures.com. We'd love to earn your business and help you along the way. Our phone number here is 1-800-771-6748. If it's local, 561-367-8686. And again, I'm just reminding all of you, please use only risk capital. Trading futures entails a lot of risk. It's a leveraged product. Past performance is not indicative of future results. And that's basically it for now. I'll see you on the next podcast, and I wish you well.